got Prashant Tripathy, the MD and CEO at Max Life Insurance as well, who's with us to discuss really where the growth is coming back in ULIPs and which insurance segments are perhaps showing growth in the way ahead. Mr. Tripathy, good morning. Now, industry growth this year has been a little lower than the last 2 years, while Max has really grown in line with the trend. What was the product mix this year? Did you see more ULIPs trending positively versus other products? Just share with us really how the map has been shaping up.
So Max Life Insurance always has believed in having a very balanced product mix, and we typically look for about a little over 40% ULIP and 60% traditional product designs, and consistent with our product mix in last couple of years, I think this year was similar. So we haven't seen any drastic change in our product mix, but suffices to say that for industry, especially private industry, because of volatility in stock market, there has been a marginal reduction in ULIP sales across the industry.
So how are you planning to negate that? You also have a ULIP exposure. It may not be large, but it is still 40% of your portfolio. Has that 40% slowed down for Max also?
No, it has not. Basically, 2 or 3 points we need to understand with respect to the slowdown or the so-called slowdown. Since 2016-17, the industry has been growing upwards of 20%. So 2 years of upwards of 20% growth, which made the base really large. And hence, that kind of momentum anyway is a bit unsustainable. So this year, I think the growth will be more around 10%, and one would hope that once the base settles, you would start to see upward growth. However, the growth in life insurance industry, which is closely linked to the savings rate, hence closely linked to the GDP growth rate, I would expect that on a sustainable basis it should grow between 12-13%. So really 20% was an outcome of a few artificial things with respect to formalization of savings that took place. For us, honestly, with the way we sell ULIP and with the kind of fund choices that we make, and with the quality of advice that we enjoy with our agent advisors as well as our partners, insurance is a long-term product design. So honestly, if communicated well, if sold well, the value of long-termness must be communicated, because of which you won't see a drastic reduction in sales if communicated properly. So in our case, very happy to share that the growth that we have seen is all across, including in ULIP.
Okay, good to hear that. And where would you say would the focus area be going forward?
I think, from a product perspective, the focus will continue to remain towards keeping the product mix balanced. However, there is a focus towards driving protection a bit more. As we outlook, for the first 9 months, we are close to about 7% of the total products, individual products coming from protection, and on a policy basis, close to about 29-30% coming from protection. So we want to continue to raise that, and hopefully in 2 to 3 years' time, we'd like to have our product mix going upwards of about 11-12% through protection. There is a bit of focus with respect to non-par also, but overall, we're not outlooking a drastic change in product mix. There'll be a focus, of course, towards building distribution, continue to focus on our own channels, looking at customer-related outcomes, focusing on persistency, and stuff of that kind. But with respect to product, I think marginal shifts. There is just one point that I like to make, which is the new product guideline, which is expected from the regulator. It will come early next year or early this year, perhaps. There are some very positive, outcomes expected from the new product guideline, and we will review that and very quickly like to align, which may also give flexibility as well as more allowances with respect to segments like retirement, segments with respect to new riders, as well as also flexibility to tweak the ULIP design a little bit. So, that will be the overall objective with respect to products.
If I look at the Indian insurance industry, there are nearly a dozen players. just handful of them make money. You're one of them who makes money. The tail end is not making money. What happens now? Couple of years ago, you were in talks with HDFC Life. That deal did not go through. Axis Mutual Fund, Axis Bank has gone on record and said that, look, we want to grow our insurance business and we don't mind acquiring something. Do you think that in next 2 to 3 years, out of more than a dozen players which are there in the industry, they will come down by 25%? So either you will get acquired or you will acquire somebody, let me put it frankly.
That's a very good observation. Let me just first clarify that there are 24 players in the industry, I think the top 10 are the ones which are doing pretty okay. I think the bottom a few may be struggling with respect to the sales growth. However, the growth is coming across the board. My sense is that of the 24, more than 20 are growing. So they may be small in size, they are growing, and it will take some time for all the players to start to come to the level where we are. We are, by the way, number 4 player in terms of the size of new sales, and our merger with HDFC was nothing to do with any such risk. We are number 4, and the other company where we are going to merge was number 3. So it was planned to be a marriage of 2 very large players to seek objectives of economies of scale. There was nothing to do with being acquired or acquiring. Axis and we share a very positive relationship. We have done together more than 10,000 crores of sales, and we will figure out a way of creating a win-win for both the partners. So let's leave it at this point of time. I'm very happy with where Max Life is, very happy with the growth, and our momentum just continues.
The open architecture which currently is being proposed by the regulator, especially in the distribution end, how will that change life for Max, given that the other players in the industry have banks backing them? They have a distribution which was given to them, they never created it. You've done all the hard work to create the distribution, and now the open architecture rule has come in. Is this something which we need to take notice of?
So open architecture is a very strategic decision, and the open architecture regulation came about 5 years ago, so it's not new. It came in 2013. Open architecture in India is not mandatory, it is optional. So while I know that some players have chosen, a large number of players haven't chosen it. As market evolves, you would expect that large distributors may follow the path of open architecture by creating more options to the customers, and it will be a market reality. And if the regulator were to push for mandatory open architecture, in addition to the risk that you are insinuating too, there will be opportunities that Max Life will be going for.
Tripathy, going forward now, would you be focusing more on market share, or would your focus be more on profitability? What will come first for you?
That's a very good question. I think it's very hard to dissociate the two of them. It is a retail business. It is a business of growth, and it is very hard to really say that market share growth and profitability are two. Actually, they're linked to each other. Our first objective is to hit our long-term strategy, which we call as 25-25-25, which means we have to grow our VNB at the rate of 25%. We have to hit a margin number which is 25%. And hence, we should target a return on embedded value which is 25%. So as you see, the first of the 25 is with respect to growth, and the second one is more around profitability. Though it may sound ambitious, but we will definitely look for our growth higher than the private industry and the total industry, which means we will continue to grow our market share, and we have taken several initiatives to do that. Some of them are with respect to expansion of our own channels. We have made investments in growing our own channels, and the size of our agency is almost 70% higher, will be 70% higher in 2 to 3 months time versus where it was last 2 years ago. In addition, there are new segments, new product areas that we are targeting, and because of that, all that, we believe that our growth rate will be higher than the private industry. So on one part, we will target to grow our market share, but equally, because the size we have achieved with higher growth, there are economies of scale, product mix changes that drive profitability also. So for us, it is both. But let me clarify, Max Life is not going to, go for, blind market share growth by compromising profitability. For us, both are important.
This one wrong, and I know a little bit about the 25/25/25 vision of yours, but what I don't know is that by when will you achieve those numbers?
Yes.
I'm sure you will not wait for 2025, you will achieve before that. So when will
FY22.
FY22. So you think there is a strong possibility of you going there?
22 is the target, yes.
Okay, so let's...
I think the management team has tasked to work on it, and
okay, so my next follow-up question would be that can you throw more light on it, because if you reach 25/25/25 like you indicated by 2022, then the numbers and the size and the base what you're looking at would be dramatically different. Your cost will come down, your base effect would kick in, synergies would kick in, you would have a serious size to reckon with. What is that? What are the 2 or 3 steps which you are planning to do immediately to reach those numbers? It's not an impossible number, but it requires a lot of hard work.
So, Nikunj, let me just first clarify that, we are already a 20-20-20 company. So last 3 years growth rate for Max Life Insurance has been upwards of 20%. Our margin numbers as we speak are close to about 20.5 to 21%, and our return on embedded value is also upwards of 20%. So we are already a very strong company in terms of our profitability, and with last 3 years of upwards of 20% growth rate, in terms of new sales also we are fairly large. As we outlook, there are 3 or 4 things that we are going to do. Some bit of that is already kick-started, which will give us, closeness to our aspiration of becoming 25. The first of them is our own channel expansion. There's a lot of work and investment that we have done to, focus on our own channels. And as we finish the year, our own channels are growing closer to 30%. So, like I mentioned to you, this year growth is going to be 21%, but within that our channels are growing at close to 30%. And when you start to make investments in own channels or agency, it builds up for a few years. So we believe that the momentum will continue. I will again say Max Life is very lucky to have very cherished relationships, and we believe that the momentum will continue there as well. Focus on protection is the second element. We are trying to grow our protection, and this year, the year that went past, our protection percentage has gone up by 150 basis points because of our focus, and we continue to be one of the leaders in growing, protection through internet channels. So as we go along, the objective is to go upwards of 10%, which gives the margin kicker. That's the second bit that we're trying to do. And the third one is, with respect to experimenting with new channels, starting new channels. We've scanned the market, and there are almost half a dozen initiatives of growth that we're currently experimenting with. That should also give a kicker to our growth rate. So, a combination of investment in our own channels, expected growth from partnership channels, experimenting with new channels, protection mix, and focusing hugely on customer, which will drive retention and upsell, are the 4 or 5 things that we are going to do, which will, hopefully lead to a 25-25-25.
Okay, Prashant, great to have you on the show, and thanks so much for taking the time out and speaking with us today. You have a good day.